Hey everybody, welcome to Financial Revelations. I am David Safransky, fresh back from Mexico. I know I don't look that tan, but I got tan lines I'm not going to show you, so don't even ask. I got to be very careful in the sun. I'm fair-haired. Well, I don't have any hair, but I'm fair-skinned, and so I burn really easy. So I take like sunscreen 1000 with me, and I'm very careful. But you can hear me every Thursday morning on WCRF 103.3 in Cleveland or the Moody Radio app. And you can call us at 1-800-344-2534 with your questions, your comments, if you want to work with the firm. If you just want somebody to take a second look at what you're doing, we'll do that for you too. Now you have to, there's a little bit of paperwork because I got to know what I'm talking about. And as always, you can email questions to Corey, and that email is down below me. We have, I want to thank people because we have gotten a response on nativos.org, nativos.org, and Corey's going to put that down here too, and that's where you can donate to our mission trips. And I want you to know, if you give money to the mission trip, 100% of that money is going to the trip, to fund somebody's trip who could not pay for it, and to help the missionaries when we get there. But there's no fees taken out. It's 100%. So you give a dollar goes. We're just trying to help people in Brazil. We drill freshwater wells for people who have no fresh water to drink, the indigenous tribes, and we deliver the gospel. And you can go with us too if you want. We're going to go next June, sometime around that time frame. So if you have an interest in that, reach out to us. There was a lot of news this week. There was a Fed meeting Tuesday, Wednesday, and Chair Powell decided not to raise rates. They left rates steady where they're at. They've raised rates 11 times, 550 basis points, which is 5.5%. And it is starting to have an effect on things, not nearly as much as what they thought. So they took a pass in September. And now the language that he used, though, so they give their decision at about 2:05, and then the Chair Powell comes out and he has a press conference and people ask him questions, and he said in his prepared remarks before the question and answer period, he did say that there are more rate hikes coming, and it's not necessarily true, but in this case I do think it's true. I have long held that there's going to be 2 more rate hikes, and then they're probably going to be done if the data allows. Now, what's happening? I think that there's going to be a rate hike in November, and there's going to be a rate hike in January. And why are they going to stop then? They're going to stop then because there's a presidential election coming, and they don't want to be in the market during the presidential election. Although, and we have a listener question that we're going to answer in a minute here, but I do think we're headed towards a recession. They've talked about soft landing before. In 2007, they were talking about a soft landing. How did that work out for us and the Fed? It didn't. We got 2008. Now, the Fed didn't cause that problem in 2008, but the rising interest rates sure contributed to it. I don't think we're there now. I don't think that's going to happen now. But what I think is going to happen is that we're going to go into a recession and Donald Trump is going to be president. I think he's going to win. If he's the nominee, I think he's going to win in 2024 because already the Democrats are bailing on the Biden administration. You see it everywhere. Even CNN is coming out with very difficult articles and production about the Biden administration. So you could see the tossing overboard is starting to happen. And really, the last 3 years have been very problematic. There has been runaway inflation. The number one growth component of the economy and the jobs market right now is the federal government. And that you don't want that to be true, no matter who the president is. And they've dumped about $7 trillion into the economy. Well, of course the economy is going to grow when you have $7 trillion going into it, all government. But here's what is happening. Loan repayments are going to happen in October. That's restarting. So people are going to have to repay their student loans. And you're looking at $1 trillion coming out or more just in student loan repayments. That's going to have a powerful impact on the economy. And oil it's going to be at $100 or more. Some people, Goldman Sachs will come out with an oil prediction. Goldman Sachs is a big money management firm. They're an investment bank. They've been around for a long time. They're prestigious. But whenever they give an oil prediction, like oil at 300, the top is in oil. Even they haven't come out and gone overboard on oil. I don't really know what their prediction is right now, but I haven't heard the dire predictions that they usually have. And they'll say, oh, oil's going to $1.75 a barrel. Well, that never happened either. So whenever they come out with those kind of like off the bell curve predictions, I know that oil's going the opposite direction. And I haven't heard that from them. But I do think oil's going to be north of $100 a barrel. And that creates inflation. That is inflationary. When you think about anything that you buy, you go to the store and you buy it, or you buy it on Amazon and they deliver it. Guess how it gets there? In a gasoline-powered truck, a diesel-powered truck. So if the price of doing that is more expensive, the price of your food is more expensive. And that's what we saw in the last CPI report, because oil had risen pretty dramatically in the month of August. It reflected in the CPI report, and it's not done yet. Inflation's going higher. It's not going lower. Now, the Fed will say, well, we back out food and energy because it's so volatile. But last time I looked, we all eat and drive cars. So we use food and energy. I don't care if it's volatile. I think the real inflation rate is somewhere around 5.5%, 6% right now. It's what it feels like to me, because I go to the store and I see what things cost. And I think the Fed is going to raise rates until the unemployment rate is around 4.5%. I know a lot of economists are saying, well, because the employment market hasn't really, the unemployment hasn't gone up, the Fed can take comfort in that. They're not taking comfort in that. It's the exact opposite. And, one of the things that I've learned with my training, I have a degree in economics and finance, background in finance, and a lot of time, economists are just wrong. Paul Krugman, he's really a Democratic strategist masquerading as an economist. He just talks the Democrat book. That's what he does. And I have learned to trust my instincts. Now, are they 100% right all the time? No. But I have trusted my instincts, and it's served me well over time. And my instinct says that until unemployment goes to 4.5%, the Fed has a green light to raise interest rates. Now, you're seeing some things. You're going to get a few anomalistic numbers because the UAW workers are on strike, and they may get locked out. So one of the things that the UAW workers are fighting for, well, the union is, they want a 40% pay increase. 40%, okay? They want a 4-day work week, but get paid for 5. So you're getting paid for a full work week, but you're not working a full work week. And they want defined benefit plans back, so pension plans. It's not happening. Those are a relic of the past. They're not going to get that. They're overplaying their hand, and they're probably going to get locked out. I don't want to see people unemployed, but that's inflationary. And why can they do that? Why does the UAW have confidence that they could do that? Because they feel relatively certain that the government is not going to let a car company go bankrupt and there's a bailout coming. And we've got to get out of this bailout economy. It's just not healthy for anybody. If you remember, Detroit went bankrupt one time, just not too long ago. And really what it was unions negotiating with Democrats, giving the unions whatever they wanted. And it turns out there's just not enough money to pay for it. And so what do? You go bankrupt, and then you ruin people's retirements. And nobody won in that deal. Nobody. It's silly. And the union is definitely overplaying their hand. Now, I love American auto workers. I love America. You know that I love America. But there can be an overplayed hand, and I think that's what they're doing right now. So that's my take on the Fed and what's happening and what happened last week. And I feel like we talk about the Fed every week, but the Fed's in the news almost every week. Something's happening or inflation reports coming out, and that's kind of the headline. So we're still buying short-term bonds. The 10 years up, the 2 years up. 1 year, you're getting some I bought 5.4s today. Under a year, 6 months, 3 months, we're at 5.4. And I think I'm about to see a 5.5 for under a year Rates are going up. We don't need the Fed to raise interest rates for the rates to go up because the market will do it for them. And that's what's happening. Listener question is, should I be preparing for a recession? And the answer, unfortunately, is probably yes. I do think we're going to have a recession next year. I think any hope that the Democrats had for retaining the presidency, I think will be over at that point. It's very rare that a president would get reelected with under 2% growth in the economy, and I think that's in jeopardy because oil prices and loan repayments, a lot of things are going to be happening. And the second part of their question is, how do I prepare for a recession? And there's a couple of things that you can do. Markets will fall going into the recession, but they'll also come out of the doldrums about 3 to 6 months before you're out of recession. It takes a while for the recession to get identified, even though you're in it, and it takes a while for the government there's a Bureau of Labor Statistics is the one that declares a recession and says we're out of it, and what they'll do is a few months after we're out of it, they'll say, oh, yeah, we came out of a recession and this is the date we did it. Well, the market's already ahead of them. So I don't want to sell out of the market. And I don't think that we're in a 2008 time frame with like where the market is. I don't think you're going to get the housing crash because banks can't loan money to people that can't pay their mortgage. That's been over for a long time. So I think you might see a drop in housing prices, but it's not going to be 50% like we saw in everybody living on the street like we had in 2008. So the way you prepare for a recession is I like to own big things, big stocks, the best of the best, the cream of the crop, the one or two top companies in that industry, whether it be tech or whatever the industry is. You got banking, you got tech, you got all these different S&P 500, manufacturing, consumer discretionary, the best of the best of the best. And then I like to trim my winners off now. That's what we're doing. We're trimming some winners. And for our more conservative clients, we're going into bonds because you could buy a bond right now and get a good number on it. You can get good yield on it. You could even get a money market right now that's paying 5.4%. The reason why I like a government bond a little bit better because if rates come down, the money market's going to follow very quickly. But in the government bond or a high-quality corporate bond, that rate is a stated rate. You get that until the bond comes due. So there's a little less, there's less reinvestment risk there. So that's how in my investments, and I want to keep a little bit more cash on hand. I want to make sure my emergency fund is funded. I want to get my consumer debt to zero on a monthly basis. I'm not telling you don't use your credit card. I'm not Dave Ramsey where I say nobody should own a credit card. There are some people, admittedly, that should not own a credit card, and they're always running a balance of 3 months' income. Can't do that. It's going to crush you in a recession, especially if you get laid off. So get those kind of tighten the ship and circle the wagons a little bit financially. Tighten up. Get your emergency fund done, fully funded. Get your consumer credit down. Have a little cash. Now, we are going into a presidential election year, and there's some presidential election prep that I think we should be talking about. And I hate to have to talk about this because I'm not a doom and gloomer. I don't want to get people excited unnecessarily, but do you remember the summer when Donald Trump was president and basically Black Lives Matter and these left-wing groups were burning down America? Remember the riots? It just seemed like they were going on and on and on. Like, what? Why isn't somebody doing something about this? There was I think it was Portland, where activists, anarchists took over like a 6-city block, and they named it Chaz or something like that. And if you lived there, you were in danger. The police would not go in there. And, Donald Trump is probably going to be the Republican nominee, whether you like it or not. I happen to like it. I think he's going to get elected. That's what I think. I think there's enough discontent, and I think the economy in the country has been mismanaged enough to where his populism is going to catch a bid. And I think he's going to get elected. And I don't think that's the worst thing in the world. Now, I don't want to be mean to people. I don't like when he makes fun of people. I don't like that. It's unnecessary. You don't need to do that. But here's what I want you to do to prepare for the election in 2024. I want you to have a little extra food set aside. Get some rice and some stuff that has shelf life to it. Store some water. You can get containers and put water. And I hope we don't need it. I don't know, but I want to be prepared. I have a little gasoline. You can get some 5-gallon containers and set some gasoline, in your garage or someplace safe. Be careful because it's very flammable, of course. So food, toilet paper. Remember when COVID hit and everybody bought all the toilet paper, like they weren't going to make toilet paper. You couldn't get toilet paper for a few weeks. And for heaven's sakes, get some deodorant in case we have to meet together. I don't want you to stink when we're together. So have a little extra deodorant. But just some of those perishables, in case you got a shelter in place for a while. I don't know what's going to happen, but I know that when the right wing loses an election, you know what we do? We go to work on Wednesday. When the left wing loses an election, they burn stuff. They turn stuff over. They say, well, we just didn't get our point across. We weren't communicative enough. And I say, well, when the left loses an election, we heard exactly what you said. That's why you lost the election. So I don't want to go through another summer of discontent without having some supply set aside. And that's how I would be preparing for next year, whether it be a recession or a summer of discontent, because I do think Donald Trump is going to be the nominee. And you saw what happened. You saw how unhinged people came on the left last time. And for one thing, I'm imploring you, we don't want to be those people. I don't want to do that. I don't want to get my point across with violence. I just think it's a way to lose your argument. Vote and, put signs in your yard, canvas for, I do think that our country is completely headed in the wrong direction right now. We need to take it back with the vote. That's how we do it. And then go out and work for it. And that's what I want you to do. Be peaceful in our protests. That's what we do. And then we go to work on Wednesday, no matter what happens on that voting Tuesday. So, as always, you can reach out to us in between now and next week in the podcast. And I'm going to make you a promise. I am not going to talk about the Federal Reserve next week. I'm going to have totally different subjects. We're going to talk about investing, planning, building, because that's what we do. We build, we plan, we invest. I want you to retire wealthy. I want you to build wealth. I want you to pass on wealth. I want you to give money to charity. That's what I want to do with wealth. Our system in America, the capitalism that we have here, has dragged more people out of poverty and provided more money for charity. There's a book, it's in my book club, called The Biblical Case for Capitalism, and I want you to read it. It's short, it's not a wonky economic read, but you will be so impressed with our system after you read that and what we've been able to accomplish. Socialism isn't even close. And that's what's happening right now. European socialism is trying to be placed here. Do not let that happen. Fight it with every fiber of your body. Fight the central bank digital currency with everything. Write to everybody you can write to and say, no, we're not going to do this. I am David Safransky, a real American, a true red-blooded patriot, and the voice you can trust.